Today I was really tempted to buy some Bitcoin. Um, and I know that this seems like kind of crazy coming from like a professor of innovation and entrepreneurship, but I don't own any specifically Bitcoin or cryptocurrency or anything like that. And I don't plan on doing it. I decided it's not a wise decision to do that. And I actually want to talk about that because I think it's super important for all of us to understand how markets work, especially how the financial markets work, and because it's not obvious. It's sort of obvious after the fact, but it's not obvious unless somebody sort of coaches you through this. So, what you're doing when you're buying, firms in the stock market. So I just buy index funds for the most part. I buy some mutual funds that have been around for a long time that look like they sort of perform pretty well, but even still, like, have it pretty diversified within just firms. Um, and the reason is what you're trying to do is pick up on the top managed firms within the world, right? And if you're betting in that, you're just betting in resources, right? So you're betting on how people actually manage different things. And I know that there are some technologies that are going to enter the marketplace. And if you repeatedly buy the best firms within the stock market, what's going to happen is that when these new technologies come into play, um, the people that you're investing in, they're pretty smart, right? Like I have a lot of confidence in Apple and I don't know, McKinsey and IBM and I don't know, Weyerhaeuser, all these different sort of companies that are around. I have confidence that in aggregate, there's going to be a couple of managers that are going to be good at these companies that are going to pick up and say, hey, you know what? We can use these cryptocurrencies, we can use this crypto technology, blockchain technology, whatever you want to call it, and we can bring it into the firm, and we can pull it into the firm, and then eventually it will become part of the firm. And another thing that ends up happening is that if there's a crypto company that does well, right? So right now I think Coinbase is doing pretty well. There's I'm sure there's a zillion other crypto kind of companies that are out there, and if they do well, they will eventually go on to the stock market. The reason is that's where most of the access to capital is there. And so if they're performing pretty well, they're going to get onto the stock market. And if you repeatedly buy those stocks, if you buy just kind of like index funds or something along those lines, just repeatedly keep buying them, eventually they'll get into your portfolio when it's the right time to get into your portfolio, when it's um, somewhat less risky, I guess. They sort of proven themselves a little bit more, but also that they've sort of shown to outperform all these other different companies that are out there. Now, some of you might think like, oh, geez, that is kind of a silly strategy to think about, to only buy those index funds, or only buy, just basic mutual funds. But and you might be thinking because you're missing out all of these significant returns. And what you're forgetting about, cryptocurrency is like any other technology, but cryptocurrency is especially tricky because there's no real inherent value that's behind them, because it's just a currency, just like everything else. And I know that everybody's going to argue with that and all that kind of stuff. It's a fancy kind of currency, and I know it can do all sorts of different things, and there's smart contracts and all that kind of stuff. But you know, the other